Welcome back. In this video, I want to talk about Tangerine's mutual fund portfolios. These are some products that I do talk about in my financial class that I teach. If you've been with me for a while and you've seen some of my videos, you'll know that I actually don't like the mutual fund industry too much here in Canada. Canadians pay some of the highest fees in the world for mutual funds. That average fee is around 2% for mutual funds, and that's probably about 10 times more than you could be paying. Tangerine mutual funds do offer a lower rate than traditional bank mutual funds. You can get some of these portfolios for 0.76% or 1.06%, depending on which portfolio you do choose. So you can get them for less than half of what traditional banks are charging. These are extremely easy to invest in. A couple of clicks of a button, and you'll have it all open and set up and ready to go. If you are starting on your DIY journey and you're a little intimidated about getting started with a discount brokerage like Wealthsimple or Questrade or something like that, this could be a great place to start your journey. So let's look at some of the options available through these Tangerine mutual funds. You can see here they have three different types of mutual funds available. They have their core portfolios, their global ETF portfolios, and their socially responsible global portfolios, the SRIs. I won't be talking about the SRI portfolios. I'll just be talking about the core and the global ETF portfolios. So let's just look at the core portfolios first. You can see here that they have a balanced income, balanced growth. They have a dividend portfolio and an equity growth. So let's start with the equity growth. I'm a big fan of the 100-0, the all equity portfolios. If you scroll down, you can see here at the bottom it says it's a 100-0 portfolio. So it is 100% stocks, 100% equity, and 0% bonds. And you can see the core portfolios always break up the equity portion equally. So the Canadian, US, and international stocks are broken up 1/3, 1/3, 1/3 in this portfolio. And you can see that this portfolio has been around since 2011. And these core portfolios offer an MER of 1.06%. And if you're looking at a balanced growth, generally, a balanced growth ETF is an 80-20 portfolio, 80% equity, 20% growth. But you'll see here, Tangerine has decided to do a 75-25, and so 25% bonds, and then again, the equity portion is split 25-25-25 Canadian, US, and international stocks. And again, core portfolios have an MER of 1.06%, and their balanced portfolio, just like balanced portfolios in ETFs, it's a 60-40, and again, 20-20-20 for their equity portion with the 40% in bonds with a 1.06 MER. Looking at the global ETF portfolios, these are structured much differently. They haven't been around for as long. Their inception date is around 2020. Starting with the equity growth ETF. Again, they call it an ETF, but these are mutual funds. They just happen to invest in ETFs. So let's look at their allocations. So you can see that it is a 100-0 portfolio, 100% stock, 0% bonds. You can see the allocations are quite different. So first of all, they call it a global ETF portfolio because they invest with Scotiabank ETFs. And Scotiabank does own Tangerine, so they're going to use Scotia ETFs. This is still a mutual fund. You cannot trade throughout the day or anything like that. If you put $1,000 into these, then at the end of the day, whatever the price is, that's what you will purchase each of the shares for. And so you can see here, it's got a heavier weight in the US. The core portfolios were split evenly, but this one has a 64% allocation to the US, 22% allocation to international, a 10% allocation to emerging markets, and just a 2.79% allocation to Canadian stocks. So these are set up a lot more like what the global market is set up like. Here's how Canada stacked up in 2023. You can see the Canadian global market was only 2.7% of the entire world. And here's another illustration from Visual Capitalist. And you can see that Canada now in 2025, the beginning of 2025, has an allocation of about 2% of the world's market share. You can see that the US is now at about 50% of the entire market share in the world. And so these global ETF portfolios try to mirror that a little more closely than what the core portfolios did. Looking at the balanced growth ETF, you can see they continued the 75-25 allocation. You can see that bonds are at about 25%, and then the allocation to US is much higher, and again Canada is much lower. And so here is the MER for these. So the 0.76% MER for the global ETF portfolios. So it is lower than the core portfolios. And then the balanced portfolio again is going to be a 60-40 portfolio. And you can see bonds are a little higher than 40% right now. But again, higher allocation to the US, lower allocation to the Canadian market with a 0.76 MER. I've added these portfolios to the asset allocation spreadsheet that I keep, and you can see the comparisons there. I do have a brand new inclusion, TEQT, the TD All Equity ETF portfolio. TD just introduced their All Equity portfolio. There's not a lot of data on that as they just introduced this at the beginning of 2025. But you can see here in yellow, I've included the Tangerine Global ETFs, so INI 440, INI 430, and INI 420, and the Tangerine Core portfolios, INI 240, INI 230, and INI 220. You can see the MERs are higher than the asset allocation ETFs. The distributions are annually, and they just get redistributed, so all your dividends come in December, and they just get automatically reinvested into your portfolio. So you don't get a cash holding or anything, you just buy more shares of your portfolio. And you can see the split there, slightly different than the other portfolios, and the number of shares that you have compared to the other ETF portfolios. So these are all globally diverse portfolios for sure. How do they stack up to the asset allocation ETFs? Not too bad actually. So I've just taken this data from Morningstar and I've started at the date that the global ETF portfolios were introduced. So somewhere in 2020, and you can see that INI 440, that's the global ETF portfolio, has lagged a little bit, but INI 240, the core portfolio, has really held up very well compared to the asset allocation ETFs. Here's an image from Morningstar of the balanced growth portfolios. So again, the ETFs will use an 80-20 portfolio allocation, where the Tangerine portfolios use a 75-25, but again, they're holding up fairly well compared to their ETFs. And the balanced portfolio shows similar results. You can see there is some lag there. That's because the fees are a little higher, allocations a little bit different. And this data only goes back to about 5 years. Again, long term, what is it going to look like? We don't know for sure. It depends on how everything's set. But over the last 5 years, they've held out fairly well compared to the asset allocation ETFs. I keep talking about how easy it is to set these accounts up. If you log into your Tangerine account, there's two places you can do it. You can go to the top and select products, or you can scroll down until you see open an account. Scroll down to the investment portfolio that you would like to open. So here's some of the different investment accounts you can open, and let's just select the tax-free savings account, click add, click continue. You can open multiple accounts at the same time if you want. Continue here, and then you would enter all your information here. They'll ask you a few questions, and you can select which portfolio you would like to open. I'm not going to do that. I don't want to open one with Tangerine here, but that's how easy it is to set it up. And to invest into it, literally you just say, I want to put $1,000 into my Tangerine account, and boom, you've purchased $1,000 worth of your shares. I had a student recently turn 18. She took my financial class last semester. And whenever a student turns 18, I always send them a message wishing them a happy TFSA day. And jokingly, I asked her if she woke up early in the morning and opened a tax-free savings account. And she said yes, she had actually opened 2 accounts. I laughed and I said, why did you open 2 accounts? And she said, well, she wanted to open one with Tangerine and one with Questrade. And she wanted to compare the 2 platforms and see which one's easier and how they both work and all that sort of stuff. And then she asked, was that stupid of me? Absolutely not. That's not stupid of her. I have grown so much in my financial literacy journey just from trying things out. I started at CIBC with high fee mutual funds. Then I went to Tangerine Core portfolios. Then I went to a TDE series low cost mutual fund. Then I went to Questrade, and now I bounce back and forth between Questrade and Wealthsimple all the time, depending on who's giving me the better deal. It is fantastic that she's exploring these different options. It's fantastic that she's opened a tax-free savings account when she's 18 and investing in it. I wish I was like that. So are these portfolios right for you? I mean, that's up to you. If you are intimidated by do it yourself, and this could lead you to starting your own journey, then they're perfect for you. That's how I got started. These are extremely easy to open. They're extremely easy to invest in. You don't have to select the ETFs. You don't have to buy specific ETFs. You don't have to rebalance your portfolio. You don't have to set up a drip for your dividends. This is all done for you. You literally click a button, move money, and it's invested for you. I do hope that this video has shown you if the Tangerine portfolios are right for you. And if you've enjoyed this video and would like to stay informed of some of my other ones, please subscribe below and have a wonderful day.